Welcome to Aussie Finance Chronicles, where money, history, and power collide right here down under. This isn't your typical global finance channel. We offer a deep dive into Australian financial history and personal finance, told entirely through the lessons of the Aussies who paved the way. We examine major local events from the gold rushes to the superannuation system to understand the forces of capital, debt, and systemic control. You'll learn how wealth is built and lost by studying the patterns of the past. History doesn't repeat, but it certainly rhymes. By understanding our continent's failures and power plays, you can sharpen your financial sovereignty, master your money mindset, and avoid the traps that took down local empires. Our mission is simple: to ensure every Aussie is equipped with the knowledge to thrive financially. As Vulcan Temis once said, being Australian is a privilege. Being Australian is dominating a great continent. Being Australian is a great power. There is a force in Australian investment so powerful it even has Wall Street's attention. This power comes from our retirement funds, but the biggest and most influential funds didn't come from banking giants. They were born from trade unions. These funds aren't just about retirement money. They represent Australia's largest pool of capital. This is the story of Australia's greatest financial revolution, the rise of the industry funds. We're going to look at the core contradiction here. Think about the traditional role of a union movement fighting for wages and worker safety. Now, picture that same movement managing billions of dollars in the cutthroat world of modern finance. The secret to their incredible success lies in a simple philosophy: not for profit, but for members. This principle is the key. In this video, we'll explore the rise of industry funds in 5 distinct stages. First, the vision of the ACTU that started it all. Second, the Keating government's compulsory superannuation reform that guaranteed explosive growth. Third, the unique governance model and low-fee structure. Fourth, the political and market battles they fought to dominate. And finally, their future as global supergiants. Before the mandatory superannuation guarantee, or SGC, unions were already experimenting with voluntary retirement plans, particularly in sectors like construction. These early funds were a direct response to the high-fee retail funds offered by banks and insurance companies. They were built on a different idea entirely. The real turning point came during the Prices and Incomes Accord. Leaders from the Australian Council of Trade Unions, the ACTU, sat down with Bob Hawke and Paul Keating. In exchange for wage restraint, they put superannuation on the table. Their crucial condition was having a say in how these funds were managed, leading to the foundational principle of industry funds: equal representation, with both employer and employee representatives on the board. This era saw the birth of the first generation of industry funds. Names you might recognize today, like Hostplus for the hospitality sector and Cbus for construction. Their early days were a struggle. They had to convince not only union members but also employers of their value. Their governance structure was revolutionary: a 50-50 split between worker and employer representatives on the board, ensuring member interests came first. From the very beginning, there was a clash with the established retail funds. Banks and insurance companies dismissed these new players as amateurs, but the industry funds had a secret weapon: their not-for-profit structure and low administration fees. This meant more of the members' money stayed in their accounts, compounding over time. The seeds of the fee war were sown right here. Then, in 1992, came the game changer: the Superannuation Guarantee Charge, ORSGC. This law made it compulsory for employers to contribute to an employee's supered for industry funds. This was like turning on a financial fire hose. Contributions automatically flowed into these sector-specific funds, rapidly transforming them into pools of hundreds of millions and soon billions of dollars. So, how did they keep their fees so low while managing this flood of money? The answer lies in operational efficiency and economies of scale. By pooling resources and investing in shared technology platforms, they drove costs down. Over decades, these lower fees have made a massive difference to the retirement savings of millions of Aussies. When you compare the long-term returns, the impact is undeniable. This massive pool of capital also required a different investment strategy. Seeking stable, long-term returns, industry funds developed a love for infrastructure. They became the primary financiers of Australia's physical backbone, our ports, airports, and toll roads. In doing so, they weren't just growing retirement balances, they were literally building the nation. Of course, their unique board model wasn't without controversy. The equal representation model was praised for keeping the funds member-focused, but it also raised questions about potential conflicts of interest and the financial expertise of union-appointed directors. Over time, this led to significant transformations in corporate governance and mandatory training for board members. The next major challenge came with the choice of fund reforms. The government introduced this policy to increase competition, allowing workers to choose their own superfund. The expectation was that this would slow the growth of industry funds. But the opposite happened. Armed with their low fee advantage and strong performance records, they didn't just hold their ground. They actually increased their market share. This forced a new battleground, marketing. Faced with massive advertising campaigns from the banks, industry funds had to learn to tell their story. They turned their profit-formers' message into a powerful public relations tool, launching their own campaigns and mainstream media ads to build a brand based on trust and member alignment. The ultimate stress test came in 2008 with the global financial crisis. While markets around the world crumbled, the industry funds demonstrated their resilience. Their long-term investments in unlisted assets like infrastructure proved to be less volatile than the stock market, helping them weather the storm better than many retail funds. This relative outperformance massively boosted public confidence in their model, but their growing power also attracted political scrutiny. Opposing governments began to question their links to unions and their spending on marketing. This kicked off years of regulatory battles as political rivals sought to curb their influence and level the playing field for the for-profit sector. A key turning point in this war was the future of financial advice, or FOFA, reforms. These reforms banned conflicted commissions paid to financial advisors, which had been a major revenue stream for the retail funds linked to banks. By removing this advantage, the legislation further solidified the competitive edge of the low-fee industry fund model. In recent years, the pressure for scale has triggered a wave of mergers. Industry funds began combining to create financial titans managing over $100 billion each, making them some of the largest and most powerful investors in the entire country. The era of the supersized superfund had arrived. Their influence is no longer confined to Australia. These funds are now major players on the global stage, investing in significant infrastructure assets across Europe and North America. They have evolved from small, member-focused entities into sophisticated global capital allocators, shaping markets far beyond our shores. True to their union roots, industry funds have also become leaders in ethical investing, focusing on environmental, social, and governance, or ESG principles. Their social conscience, driven by member expectations, has pushed them to integrate these concerns into their investment decisions, including making landmark decisions to divest from thermal coal and other fossil fuels. The final vindication for their model came from the Banking Royal Commission. The inquiry exposed systemic misconduct and a fees for no service culture within the for-profit retail supersector. In stark contrast, the industry funds emerged relatively unscathed. This moment cemented their reputation and powerfully validated the profit for members' philosophy in the public eye. However, their immense size now brings its own set of risks. How vulnerable are these giants to market shocks? Is there a risk that the not-for-profit spirit could be diluted as they hire more high-priced talent from the world of investment banking to manage their massive portfolios? These are the questions they now face. With great size comes great influence. These megafunds are now powerful lobbyists, shaping national policy on everything from retirement and housing to taxation. Their voice is one of the most significant in Canberra, carrying immense weight in economic debates that affect every Australian, and they can't afford to stand still. The rise of fintech and artificial intelligence presents both a challenge and an opportunity. Members now expect personalized advice and seamless digital experiences. The pressure is on for these giants to innovate and adopt new technologies, all while keeping their promise of low costs. Ultimately, the rise of the industry funds is a legacy of the union movement's vision and economic power. Australia's superannuation system is not just a financial structure. It is living proof of the country's social, democratic, and unionist roots. The question we left with is, how did the workers' movement create Australia's biggest capitalist? Thank you for watching. If you found this deep dive valuable, please subscribe to our channel, share the video, and hit the notification bell. Every comment and idea you share helps us create more in-depth content for our great continent. If you haven't subscribed, brother, please do. I'll continue to be here with you, covering critical financial topics. Like you, I am a fortunate child of this great nation, Australia. A large portion of the revenue from this video will go towards supporting underprivileged children and those in need of medical financial aid. If you want to know who I am, you can follow me and check out my YouTube channel from my homepage. It's great to be here with you, and I'm glad you're here. Sharing this financial knowledge with all my valued Australian brothers and sisters fills me with pride. Let's work together for a stronger Australia, for a hard-working Australia, for a more honorable and glorious Australia. Let's learn our history in detail.